was that we are going to go to a central bank digital currency backed by absolutely nothing with modern money theory, and you'll like it. That was basically what it said. Now, if that's what they want, does not mean that's what they will get. Mm-hmm. So as you mentioned, Rob, I mean, I think you're very accurate. I think
Another forecast that we'll be talking about today is one that's in progress and pending. I made that for my subscribers in 2019, and that's called The World Moves to Cashless Society. And that was through the dissolution of cash and the implementation of central bank digital currencies. Again, made this over 2 years ago. It is now coming to fruition. Here is something from Reuters about central bank digital currencies get full BIS backing. Now, I've been warning you that the BIS, the IMF, and the 50 central banks were planning this. A lot of people are like, no, Rob, I don't believe you're correct. I provided support back then, but now they're coming out blatantly and saying it. So here's an article by Reuters: central bank digital currencies get full BIS backing. And it says the Bank for International Settlements has given its full backing to the development of central bank digital currencies, saying they are needed to modernize finance and to ensure big tech does not take control of money. Okay, pay attention to what they're saying. This is where the central banks, and I've said this before, are going to battle the private cryptos. They're blaming big tech for putting out the private cryptos, and now they're starting to ostracize them. I said this would happen, and none of the Bitcoin followers, they derided me for this over and over again. No, Rob, it's not true. Bitcoin and all these other ones, you know, they can't do anything. The genie's out of the bottle. They can't stop them. Well, look at what they're doing. They're aligning the central bank digital currencies against big tech and the private cryptos. And if you've been, this narrative has been coming out the last few weeks, and it's exactly what I've said for the last 2.5, 3 years. Dubbed the central bank the world's central banks, the BIS, which is coordinating many of their discussions on digital currencies, set out recommendations on Wednesday on how a central bank digital currency such as a digital dollar, euro, yen, or yuan should look. As part of its upcoming annual report, estimated that at least 56 central banks and monetary authorities representing around a fifth of the world's population are now looking at digital currencies. What did I say 2 years ago? 50 central banks are looking at it. What does it say here? 56. Okay, you guys listen to what I say. I do a lot of research, and what I say generally comes true because I listen to these guys and what they say, and I just get to it before other people, and I put the pieces together. The train has left the station, said Benoit Kieu of the BIS, referring to the move towards central bank digital currencies and its support. It's not that we are getting carried away. We're just looking around. The push comes as physical cash falls globally. Why is physical cash falling globally? Well, you had the pandemic where, oh no, it's bad to have physical cash. And you had the destruction of the middle class across a lot of the world the last 20, 30 years. So people are now having to turn to credit, using their credit cards, and now getting to digital currencies to try to make ends meet. So speculating in Bitcoin, for example. So the authorities look to fend off the threat of their money printing powers from Bitcoin and efforts from big tech such as Facebook-backed Diem. Again, they're pitting the central bank digital currencies against the private cryptos. I said over and over this would happen. They're going to alienate them. Remember back to the conversation that I had. Let's go back to when I had this conversation with Kurt, the chief historian at CoinGeek. And one of the last questions I asked him in this interview right here is, I said, the central banks and the monetary authorities around the world, together with the congressional authorities, can outlaw Bitcoin. And he says it's a big concern, but he didn't think it would happen. He thought, well, we need to get the central banks on board and make them miners. And it was this Pollyanna view of what the Bitcoin could do. It's going to revolutionize the way the central banks thought. That's not what's happening. They're pitting the central bank digital currencies against Bitcoin like I said they would. And like I told Kurt, and he didn't believe me. A lot of Bitcoin faithful don't believe me, but that's exactly what's happening. Okay, that's what's happening. Without CBDCs, digital money would become increasingly dominated by big tech firms, Kaur warned, as they would leverage enormous social media user bases. They're afraid of Bitcoin, and they're going to face off and try to get rid of it. That's a place you don't want to be, where governments don't want to be, Kaur said, describing it as a loss of control of sovereign money. What have I been saying? They're not going to allow the private digital currencies to exist. And here they're blatantly coming out and saying this is what their fear is. So if you click on this little graphic, you get the research and development on central bank digital currencies as has been going on. And you can see this has exploded since 2016. This is what I've been saying and why I've been warning you guys. If you're getting into Bitcoin and the other currencies, they're going to fight them. They're going to take that technology. They're going to implement it at the central bank level. And then they're going to go to these congresses and they're going to say, outlaw the digital currencies and put a stop to them. I've told you over and over it's happening. And it's right here in black and white, in plain English, on Reuters, a mainstream financial outlet. Were you listening to me 2 years ago when I told you this? Some countries are already well down the track. The Bahamas became the first to launch a general purpose CBDC known as a sand dollar in October. China has a number of ongoing trials, and Switzerland and the Bank of France have announced Europe's first cross-border experiment. Hello. So his colleague Hyun Song Shin said authorities will have to decide whether citizens need digital IDs to use CBDCs or go down a token-based route. In other words, if they give them digital IDs, they can control not only your trade in that currency, in that central bank digital currency, but all of them. Wait till we get to another story. And the view of the BIS, the ID system is the better way to go. Because why? Because it offers more control. Most experts think fully functioning digital dollars a year is still a year or two away, and CBDs is highly political and heating up. So a couple of other articles we can get into here. Let me see if I want to get into. Yeah, here's the one. China proposes global rules for central bank digital currencies. The rise of China, the rise of central bank digital currencies. This is not a coincidence that the rise of the Chinese economy and their place in the world and them hoarding gold, okay, and the rise of central bank digital currencies. I've been saying this over and over. Were you listening to me? China proposed a set of global rules for central bank digital currencies on Thursday and how they can be used from the world to highly sensitive issues such as monitoring and information sharing. Big Brother wants to watch you. That's what that means. You will have no privacy. What have I been saying? It's here in Reuters in black and white. Global central banks are looking at developing digital currencies to modernize their financial systems so they can do modern monetary theory, get rid of debt-based systems, and go straight to digital currency and negative interest rates in the banking system. What have I been saying? China is one of the most advanced in this effort, and they want to ward off threats from Bitcoin. They're going to fight the private cryptos. Hello. Ma Chengchun, the Director General of the PBOC's Digital Currency Institute, laid out the proposals for the Bank of the International Settlement Seminar. So anybody thinks that the BIS and the IMF aren't playing ball with China, hello, are you reading this story? China's playing a big part in what is coming. All of the central banks are. Remember, 56. The BIS and IMF are all together, and it doesn't matter where you're from. It's across the world. Interoperability should be enabled between central bank digital currency systems. That's from China. Okay, this is the big global plan. Systems of different jurisdictions and exchange, he said. The PBOC has shared the proposals of other central banks. Information flow and fund flow should be synchronized. In other words, the spying over what you're buying and the flows of the actual money should be synchronized. What have I been saying? You're not going to have privacy when these central bank digital currencies come out. Own some gold and silver. Hello. As digital currencies such as Bitcoin gain more traction with mainstream companies, investors, and private efforts like Facebook-based Diem seek approval, the onus is on central banks to accelerate plans to issue digital cash to fend off threats. It is the corporates and the private cryptos fighting the central banks. What have I been saying? The PBOC is aiming to become the first major central bank to issue a central bank digital currency, part of its push to internationalize the yuan and reduce dependence on the dollar-dominated payment system. The European Central Bank is also exploring the introduction of the digital euro within the next 5 years. It's running in opposition to Germany, though, where the Bundesbank writes a digital euro could pose risk to banks. So what Germany realizes here is they're going to lose their national sovereignty and the sovereignty of their national banking system if they allow this to go through, and they're already fighting it. A CBDC gains wide acceptance in international trade and payments could ultimately erode the dollar status as a de facto currency, and it will kill all fiat currencies, and that's by design. What have I been saying? China said separately it would quicken pilot programs to develop its digital yuan. They're rushing into it. What have I been saying? About the middle of this decade, they're going to start implementing CBDCs. What does it say right here in Reuters? The mouthpiece for the BIS. It's telling you what the plan is. Mu added that a key global rule should be a fair supply of digital currencies by world central banks. A digital currency supplied by one central bank should not impede another, so on and so forth. They're all working together. What have I been saying? Okay, getting back to the chat. It looks like here we have a super chat from Dumb Money Media. Thank you so much, Dumb Money Media, for all of your contributions. Remember, guys, if you want to ask me a question, put it into the super chat. I'll answer it. Dumb Money Media says, I used my gains this year from crypto and bought my first 10-ounce silver bar and got my wife a Monet gold chain. Awesome. I love Monet, by the way. My kids buy Monet gold. If they buy jewelry, have some pieces for the family. I'm a big fan of Monet. I think they have a really, really good product. Good to see that we have about 350 people in the chat room here. This is good for a Sunday. Good to see you all here. This is Cowboy Metals because we broadcast from the great state of Texas, and we don't take a lot of BS, as you guys know. In addition, it's sort of our European appreciation day where we broadcast earlier in the day, so our European folks can get in, and our UK folks can get in here into the live chat as well and interact with us. Thank you so much, everybody, for being on the program and for being a part of it. All right, we're going to get back to the program. Before we do, I want to remind you, if you go down to the description, we have a couple of things you can sign up for. You can sign up for our research intelligence team. You just put your name and email information on a Google Doc form. We'll get you integrated into that. We want to take all of your research and put it into that process. A lot of you guys email me. Sometimes I can't catch up with those. We've got somebody, a person on the team monitoring that research intelligence team. And we want all your research so we can bring it to you on the program. It really helps us out. Thank you for supporting us that way. We also have a private investment service. If you click on that link in the description, if you're interested in doing investment into certain companies and want to get involved in special opportunities, we're going to open this up for a very limited time to a very limited number of people. You can sign up for that below as well. All right, getting back to the program, we're going to go talk about Basel III. I promised you guys I would, and I would tie this all together. So back to Basel III we go. Here is a nice little article on Market Watch about why Basel III regulations are poised to shake up the gold market. Now, there's been opinion on either side. I've had guests on the program that said they didn't think it would change much in gold. Some people said it would change a lot. I tend to think it's somewhere in the middle, but I think the bigger issue is how it's the alignment of the system and how it's going to make physical gold more costly and harder to get. And this article at Market Watch basically says what I have been saying, published by Myra Fong on June 26, just yesterday, and is talking about the net stable funding ratio. I'm going to get down here and just go to a certain section. So as you go down here, benefits of an unallocated gold and NSFR impact. I want to read to you some of this, what Myra has written. Unallocated gold provides the most convenient, cheapest, effective way for trades to be done between professional counterparts rather than having to move physical bars against each trade. That is basically the London market, the OTC market, said Ross Norman, Chief Executive Officer at Metals Daily. It is primarily an interbank mechanism to help professional participants with clearing and settlement trades. In other words, it's derivative of actual physical gold. It's not real physical gold all the time. Under the NSFR rules, however, those are the ones proposed by Basel III and the BIS, unallocated gold goes into the balance sheet of the banks involved, and the rules propose to make it much more expensive for banks to hold unallocated gold balances. What are they doing here? They're getting rid of some of the derivative trading and getting down to more of a physical gold system, and they're weakening the London market at the same time. They're taking the power out of the London market. Remember what we just talked about, the central bank digital currencies. All the central banks around the world in this mega system are aligning, at least 56 of them are aligning. And so what they need to do is get the power of gold out of certain centers. Number one being London, in order to do that, because they're capitalizing their currencies with gold. I'm going to show you that here in a moment. The rules will not only make the cost of clearing and settling trades more expensive, but the lending of precious metals to industrial counterparts, including miners, refiners, and fabricators, will become much more expensive as the costs get pushed down to the value chain. What does that mean? We get a much closer valuation of gold because the cost will be realized instead of just the derivative suppression scheme, and you'll start to get more of a free gold. I don't think it's going to run all the way up to 10,000 right away, but you're going to get much more accurate pricing in gold, and gold price is going to go up. And I'll show you something in the COT report, which indicates the bullion banks know this and the big players know this, and they're aligning their trades in the COMEX market. Stay tuned for that information. It follows that the proposed changes will make dealing much more expensive. All in all, the changes are retrograde, may render gold less relevant as an investable asset. Okay, what does that mean? It means for you and me, they don't want us holding it, and the rules are going to make it harder to hold it because it's going to be much more expensive. They're going to price gold more accurately, and it's going to be out of the hands of the average Joe American or Joe European. They're not going to be able to afford it. That's, if you read between the lines, that's what they're saying. This is basically banker speak or finance speak for we're taking it out of the hands of the people as an investable asset. They're going to hoard it at the central banks. Pay attention. If a physical gold broker's cost of financing his stock of coins and bars, for example, doubles, then it's likely they'll hold less inventory and charge higher premiums for the products, Norman explained. If financial markets become stressed and gold demand rise sharply, and the physical supply be greatly constrained. What have we been saying with the silver squeeze and what we think is going to happen to gold and the scarcity? They're admitting it on Market Watch in this article. You have just burned half your light bulbs. In turn, that would make less gold less attractive as a safe haven. No, it would make it unobtainium because the average person can't afford it unless you buy it right freaking now. In a recent letter on the impact on the NSFR and the precious metals market, the LBMA World Gold Council said the proposals of the NSR fail to take into account the damaging effect the rules will have on precious metals clearing and settlement system, potentially undermining the system completely, and on the increased cost of financing precious metals production. In other words, the LBMA knows it's going to make them obsolete over time. I think it'll take some time, but it's taken the control out there. The World Gold Council, think about who that is. It's the mining companies and the exchanges and all them getting together. The BIS is taking control of gold from these people. It's taking control of the gold system. That's the point of Basel III. That's what I've been saying. Where's control going to? It's going to the BIS and the IMF, the central bankers. They're taking control of the gold market. That's the point of Basel III. It wasn't just to free gold. It was to move control of gold to the super bank that's being formed that I've been talking about for years. That is the purpose of Basel III revealed to you today, and then some of the previous videos I've been doing. All right, more to talk about. That's why I'm going so fast here. You guys put the video on slower speed. When you rewatch it and rewatch it a second and third time, you're going to pick up a lot of what I'm saying. The majority of precious metals held by the London Precious Metals Clearing Limited, LPMCL, which was created by the LBMA and operates a clearing and settlement for precious metals, is unallocated derivative metal. The vast majority of gold trading takes place in the London bullion market, said Gold's newsletter, Brian London. The regulations are expected to take hold in the UK at the start of the new year, so the real impact won't be seen this month, although it started to take place already in Europe and the USA. All right, we're going to stop here and see what you guys are saying in the chat. Are you following what I'm saying? Are you starting to get the connection between Basel III and the central bank digital currencies and the BIS and IMF becoming super entities taking control of that gold system away from the exchanges, the miners, and the retail market and the industrial market? They're going to take control of that market. Remember when I said the last two videos, I think Basel III is more about getting a free gold price than it is about moving control of gold to where. And I kept asking the question, is it the European Bank? Is it China? No, China and the European Bank are part of the bigger system at the BIS. It is the super bank, the BIS, that's taking control. That's now been revealed to us by several articles in Reuters and in Market Watch. Now we know the plan. Now we know the plan. It has become apparent. Whew. All right, a lot to go there, guys. I've got more to go. This is a bit of a marathon. We're going to keep pounding it. I want you guys to put your questions in the super chat. Super chat helps support the program, and they stick out to me, and I can get to them. We have about 400 users. I'm going to try to read some of the other questions, what you guys are asking. Thank you so much, Rob SO15, for saying loud and clear, Rob. I hope I'm making sense. I hope my predictions, you guys are seeing where they're coming true, and you understand what I've been saying and why it helped to become a subscriber. And I know that's a commercial, but I put the best stuff in the subscriber, and you guys have been subscribers will know the value of that. All right, now we're getting to Hugo Salinas price. Now we're going to start to make some connections between gold, China, Russia, the BIS, Basel III, and the central bank digital currencies. Hugo Salinas price is a billionaire Mexican investor. He has been talking about these markets for many, many years, and I've come to trust what he said because a lot of what he said has become true, and he's very well connected. He wrote here on the Mexican Civic Association Pro Silver, plata.com.mx, an article on April 6, 2021. I'm sorry, on May 31st. And I'm just going to read the entire article because it's short. On April 6, 2021, the website Russia Today, that's RT, made an announcement. Putin poised to set a vision for future and dramatic speech in what allies say will be the world's most important political event. What was it, according to Hugo and his contacts? It turned out that Putin did not set any vision for the future, what has been going on. In Hugo's opinion, there's only one explanation for this odd situation. Putin was threatening to restore gold backing for the Russian ruble and the Chinese yuan, the digital versions of them, and this scared the living daylights out of the BIS, the Bank for International Settlement, Switzerland, which caved to pressure from Russia and its ally China. So in other words, why is China part of the BIS? The BIS has to bring them in, because if they don't bring Russia and China in, then they back their currencies with gold. It will crash the system, that they want to develop for the digital currencies, and the BIS being at the center of that. So Russia and China flexed their weight and got pushed into the IMF and BIS. Remember months ago when I was saying the IMF is no longer a Western institution and that China was a big part of that, when they got to be a part of the SDR, for example. This is the rise of China and their control in the world monetary system. They forced their way in. As a result of Putin's threat, this May, the BIS advised it was implementing the new rules to govern international banks regarding the presentation of amounts of gold which they hold, which are no longer to include unallocated gold. In other words, Basel III and NSFR. Ding, ding, ding. You got the connection there? It has been operations with unallocated gold. That's the London gold market. Hello. Think about which markets we're talking about. With mythical gold, which has allowed the most important banks of Britain and the US to control and suppress the market price for gold. Under the new rules, which will be presented in full on June 28th of this year, the price of gold will no longer be subject to manipulation on the part of the US and the UK, because the most important banks of these countries will no longer be able to count on unallocated. Russia and its ally China have thus canceled the power of the US and the UK to keep the price of gold in the deep freeze for so many years. Will this liberate gold to an extent, but the BIS is now going to control it. You just have a different master in the gold market. That's what this means. Remember the last two videos I did. Let's go back to my website. The last two videos I did on Basel, I was talking about this is not just to set gold free. This is to move control. Where is it going? Where is it going? Okay. This is telling you, Hugo Salino Price is telling you, Reuters was telling you, Market Watch, all these different resources are telling you it's moving to the BIS, the IMF, with China being a major world player. Now do you get the plan? Nobody knows how high the gold price will go after June 28th, but the higher it goes, the lower goes the international value of the dollar. Yes, it's the end of the fiat dollar system. For those of you who thought it would never happen, guess what? This is the next stage of the financial reset going on before your eyes. And of other national currencies that are linked to the dollar through the concentration of the reserves in dollars. All the other currencies like the euro and the others that depend upon the dollar. It's weakening it. It's the movement of the financial system to a supranational system instead of just an international system. The enormous U.S. imports of Chinese goods will have to fall to a trickle, and that reduction, the result of a return to economic reality, will decimate the standard of living of Americans. This is what I have been warning about since I put out the book in 2010. I'm warning you. And if you go back to my research, and I said, world moves to cashless society, and I said, China prepares to alternative currency of the dollar. If you had read my book when it came out 11 years ago, everything that Hugo is saying and Market Watch is saying and Reuters is saying is now coming true. I started this prediction 11 to 12 years ago and did the central bank digital currency part of it 3 years ago in 2018 and then 2019 when I made all these predictions. They've all been true. Do you understand now what I'm saying? Now I'm going to make the connection to the COMEX, the alignment of the bullion banks with what we think is going to happen with gold and silver as a result of Basel. Okay. And note that they're not exiting positions, but they're lessening them. So that's why I don't think gold's going to run to 10,000 right away, because these positions aren't being completely exited. They're just being changed. So this is as of June 22nd, 2021 off the CFTC's website. You can see right here. And we're going to go down to silver first. You can see what is the big number in silver. The biggest change was the reduction right here of 8,200 shorts by the bullion banks. They're dumping shorts. Why are they dumping shorts? That was a huge amount. 88,000. Now they're at 48,000. They're at 50 something. That's what, 1/7, if I'm doing my math correctly, of their position in 1 week after being record short for how many years? They're dumping their shorts. Why are they dumping why did gold and silver get slammed down recently? To short cover so they could get rid of their shorts. Why? Because of Basel III and the reset into the central bank digital currencies. Ba-doom, ba-ding. The producer merchants did the same thing. Who was the other side of the trade? It was the managed money who dumped longs and went net short. Managed money absorbed all of this movement from the producer merchants and the swap dealers. Now into gold. This is gold. Same time frame, June 22nd, 2021. Exact same thing happened. The overall interest fell 26,000 contracts. The swap dealers dumped gold to the tune of almost 20,000 contracts, 1/10 of what they had in 1 week. Why? Because the change of the precious metals in the monetary system due to Basel III and the move to central bank digital currencies. That's why. Look at the COT report and you see the positioning. It is blatantly obvious. They're getting out of shorts because they expect the price to rise. Why? Because of the regulations. They're dumping their shorts. That's why the hammer down came this month. And people got so discouraged. The hammer down had to come so they could short cover and get out of their short positions, give them to the idiot hedge fund managers who don't understand what's going on to take the other side of the trade, who took the long, reduced their longs to match the reduction in shorts, the managed money, 28,000 contracts. The hedge funds are screwed now. They're screwed because now the prices are going to go up and they've lost all their longs, and they basically transferred the money straight to the bullion banks and the producer merchants. Okay, they understand what's going on. The players in this market understand what's going on. The financial interests just got screwed. We're going to stop the share there and see if we have any more questions. No more questions in the super chat. Do you guys understand what I'm saying? What's going on? If you have questions about this, enter it into the super chat. This is the putting together of everything I've been talking about for 10 years, from the book to my website, to what I've written on Seeking Alpha, to what I put in the subscriber area of my website, to what I've been talking about on the videos. It's all coming together. That's why I got chills that I mentioned at the beginning of the video. I got chills this morning because I saw coming to fruition all these things at the same time. And it literally, I was like, oh my God. You know, when you write about these things and you talk about these things ahead of time, it's interesting to say the least. But to actually see them all coalesce, you know, in some cases 10 years later at the same time, and to know that you're going and you're living through it is amazing. It really is amazing. All right, had to take a drink there. Can we exit this evil plan, says David Veitch? Well, yeah, by owning gold and silver, because it has no counterparty risk and it allows true private ownership. If you're in the banking system and you're in other assets like that, derivative assets, you may be in trouble because you're now going to be dealing not in fiat currencies, but in central bank digital currencies. And that's the base of the value of all those derivative assets. So if all you own is derivative assets, when they change the money supply, you're now subject to that money supply. The only way to get out of it is gold and silver. And yes, Tears for Beers, I'm not messing around. It's a no BS day here on Cowboys Metal live stream, and we're going to tell the truth, and we're going to tell the whole truth and nothing but the truth to you guys today. I've got some news, guys. This has been an exhaustive report. I don't know if I'm going to get through all the news, but there's a couple of things I wanted to highlight. We may save some news for next week. There's a lot of stuff I want to talk about. There's a lot of stuff going on in the gold market that I wanted to talk about, but I have some announcements to make. I'm just going to talk about inflation and something that my friend Karen Von Hest put on his Twitter. Dezo, he put up a chart from Fred, it's from the Fed's database, share of total net worth held by the top 1%, and colorful language over here, but basically means the elite are winning. They've won through the last two recessions. They won through the pandemic, excuse me. Whether that's by design or not, I will leave to you, but they're winning and consolidating power, and they are in these types of assets that we're trying to get you guys in, which is gold and silver. One more note from Reuters. Fed officials say temporary inflation surge may last longer than thought. They finally came out and said it's not transitory. Okay, it's not. And what have we been saying for the last 4 or 5 months when we saw the commodities complexes blow up? It wasn't just the recovery from the shutdowns. It was inflation rearing its ugly head. Here from Reuters. A period of high inflation in the United States may last longer than anticipated. In other words, we just lied to you. Two U.S. Federal Reserve officials said on Wednesday, prompting one to pull forward his views and the central bank should start raising rates. Atlanta Fed President Raphael Bostic said with growing surging to an estimated 7% this year, growth surging, and inflation well above the Fed's 2% target. Yeah, duh. We're seeing 4 and 5% in April, May, and June. Are we going to see 6, 7? He said he now expects interest rates will need to rise in late 2022. That's why they've been hinting at raising interest rates. They know the inflation genie is out of the bottle. Where are we? We're at the point in time which inflation is going to rage. They're going to tighten. It's going to cause a deflationary collapse, at least a small one. And then if it causes a big one, they're going to have to bring out helicopter money. We're at the end of this fiat system. Why? Because we're going into where? The central bank currencies. They're letting the system die now. They couldn't let it die in 2008. In 2021, 22, 23, they can let it die. They're going to let inflation run to get us into the digital currencies. Digital currencies is the solution to the fiat system crashing. Listen to their language. Given the upside surprise and recent data points, I pulled forward my projection, Bostic said, placing among 7 Fed policymakers who at the central bank's meeting last week projected the overnight policy rate may need to lift from its current near zero level. The marked a decisive shift from the end of 2020 when 12 Fed policymakers felt that crisis level interest rate would need to remain in place through 2024. Why? because they have the system in place now to get into digital currencies. That's why they're letting it run. The difference in the meantime, this is a bogus excuse. Vaccine have driven back the spread of the coronavirus and the economic reopening. Why did the shutdowns happen? Okay. Well, regardless of what you think about the virus, the shutdowns happened at a point in time to allow for the alignment of the central bank digital currencies and the system in place, and the realization of Basel III and NSFR and the alignment of the gold market all happening at the same time. Now they're saying, well, we don't necessarily, we got the vaccines, we don't necessarily need to shut things down. Now they're going to let the inflation genie out. They're going to let it run. They're going to let it run. If you don't have your gold and silver, you better damn well get it, because you're out of time. No BS today. I warned you guys. You're out of fucking time. Get your gold and silver. All right. That's all I have to say there. Thank you, Steve Ross Holmes, for another contribution. Been thinking of an exit from this for 20 years. Chris Marcus says he's going. Doug Casey thinks there's a no-brainer. Andrew Henderson makes it so clear. Have you considered leaving? If so, where? I'm not leaving because Chris went down to Mexico. Some of them live in Argentina or wherever. I still see America as being safer, and I've researched this a lot. Now, if I had to leave, I guess we could. It's always something in the back of your mind, but this is where I was born. I still think it's safer than many other places in the world. So I'm going to ride it out here. If that changes, I'll let you know. If I leave, you're not going to see this background anymore. And I'll tell you, don't worry. David Weiss says, sell your Bitcoin if you have any. Yeah, they're going to outlaw. I've been saying this forever. They're going to get rid of the private cryptos. And for those of you who think that they can't, you saw it on the stories I had today. I predicted that, and I'm correct. And I'm sorry for the Bitcoiners and the crypto people. I apologize for bringing you the truth, but the mouthpieces in the media are telling you what they're doing. At some point, you got to wake up and realize, if you want to trade and speculate, that's one thing, but holding as your long-term wealth, be careful there. The powers that be don't want it, and there's a battle coming. Whether or not you win or they win, I don't know, but they're going to fight it. I'm telling you that is coming. All right, thank you, everybody. I think we're going to end up the stream this time. Whew, that was a long one. Brought you good information. Serious stuff going on. Like I said, I got tingly on this one, but we see the plan in full now, and I've been waiting for that news, and I saw it pop up this week. I wanted to bring it to you guys. Just note also that if you're a subscriber to the website,